All right, hello everyone. It is Tuesday, July the 25th, 2023. In this video, I'm going to review my trades here on the Nasdaq. I am done trading for the day. I'm gonna roll with this 28.7612 profit. And so, although the market does not close for the day session for another hour, and the futures don't close for another 2 hours, I'm done. I'm going to take this money and run. And by that I mean I'm going to wait until 3 hours from now to start trading again. So I'm just going to let that tick over. So I'm going to go on the electronic trading hours and review my trades for the day. Today is Tuesday, so all right. I think we started out with some losses, unfortunately. So this is back on Monday's trading. I am going to go through each and every trade. I totally understand if y'all don't want to watch the whole video of that, but it's important for my development that I do go through these trades. So this first buy 3 contracts at 568.25. I know I was aiming up for these relative equal highs. But that being said, this really wasn't a good place to enter. So you can see that really would be a bearish breaker, or so low, or a mitigation block, right? High, low, higher, high, bearish breaker. It was also an order block here, and there's also sell side imbalance, buy side inefficiency. So this really was not a good place, even though I did think the market would draw back up to these highs, those relative equal highs. Well, really not relative at all. They were all 3 right there. The entry multiplier there was off, and then the stop should have been 2 points below this low, which would have been 59. What was that? That low was 61.25. That'd be 59.25, and yeah, we would have been stopped out on that regardless. So anyways, the first buy was really not a good entry, and all things considered, yeah, I took a loss on that. Second buy, again, I'm aiming for these equal highs, and again, I'm kind of questioning like why I took this long at 564.75. Like there's nothing here. And then the stop placement was suboptimal. So took 2 losses in a row there, and I think I actually took 3 losses in a row. I'm again trying to get long and aim for those equal highs because I knew we were going to draw up to those eventually. But again, guys, it's not just the draw and liquidity, right? It is a 2-part equation. You need the draw and liquidity, but you also need an entry multiplier. Okay, the draw and liquidity obviously comes first, but you need to have a reasonable entry PD array as well. And so I'm just kind of entering at the market here without really giving a damn about my entry multiplier, and I did pay the price for that. Third trade, I got long as the market, so this one did have an entry multiplier. I was again aiming for 75 evens, so I got long here at 564 halves, and I can tell you right away what that long was. That long was this order block right here, and that was a reasonable long. And then I ended up covering it at 66 evens, meaning it was a 1.5 point profit. We didn't quite make up to those equal highs. And, you know, to be honest with you, there should have been partials that came off here. I know I was probably frustrated with some drawdown at this point, but in any event, partials should have come off. Okay, so next trade, that was a short at 565 quarters, and I think, no, that was a loss. Never mind. I bought it again. Yeah, my entry multipliers on all these trades. The Asian session is really bad for me. I was again aiming for that 75 evens, thinking we would get up there, and no, we did not. Not at that time, we did not. So that was another loss because all of these losses had the same reason. Like I was just not applying my entry multipliers like and waiting for an actual setup. So that was another loss. That was a long and then a loss. I tried longing again at 559.50. Took more losses on that. I think then at that point I got short and actually did, this is kind of hard for me to tell. Yeah, I can't tell, so I'm just going to leave that. I believe that one of these was a long that I ended up covering over here. Let's see if I can get back in track. Yeah, so this is the London session, and I think at this point I was actually trying to enter in on real things. Oh, yeah. So this, at that time, I was like, yo, it's definitely running 75 evens. I remember that. It's like, it's going to run that, all those equal highs up here. And sure enough, it did. I got stopped out break even on the first attempt because I was really using way too, I'm being way too aggressive with the break even stops. So mistakes. One, not entering the proper PD array. Too tight with the break even stops. So, I mean, that's pretty clear. Yeah, so anyways, I ended up getting long 3 at 562 evens, and I actually did. Yeah, I was making some money back at this point. So good trade here. Got covered one there, covered one at 584 quarters, and then as the market came back down, covered one at 583 quarters. I did miss part of that move up, but that was a good trade. This right here, long at 562 evens. Let me see what my entry multiplier was. Entry PD array. Yeah, just so right above that black candle as it became an order block. That was good. That was good. That was a good trade. Proud of that one. Next long came in at 585 quarters, and again, it was a good trade. I ended up making 4 points and 5 points, but it should have been right here, 585 3/4 above that black candle, and then at 586 quarters, I can see we got stopped out there. So then I tried to short 582 halves, and yeah, that was not a good trade at all. The market ended up drawing up to the consequent encroachment of that wick all the way up to 592 quarters. I ended up making a point on it. I was like, well, as the market came back, I'll just take risk off, and so that was a scratch trade. That was a bad entry, man. Really missing it with the entries. And then let's see here. Not sure what that buy is. That might have been a short. That might have been a long. I'm not sure. That was a long right there. Yeah. Okay, so that was an entry. Buy 3, I think. All right. So I bought. Let's see. I bought at 591.50 as the market. Yeah. So that would be a buy side imbalance, sell side inefficiency. And let's see. 587.25. 585.75. Yeah, I think I would have been stopped out on that. Really, the ideal entry on this one would have been this volume imbalance or buy side imbalance, sell side inefficiency. The entry was a little bit off here. The first 2 contracts coming off at the nearest high at 5 points, that was way too conservative. That really should have held on to that longer, or that should have been one contract. So I secured 5 1/4 points profit, but that was, I took those off too early. Took that one off too early as well. The shorts here at 15,620 as the market came back up to that 1 minute order block, or that might have been a 5 minute order block. That was a good short. The stop was in the right place, and I ended up making 18 points on that. You can see 620 and then cover at 601.50. That was a good trade. Let the other one run a little bit far. Okay, so that was the overnight session, and basically the mistakes were not entering with a proper PD array, like just trying to. Now that the 620 entries here, that was a proper PD array, and then too tight with the stops. So, and then covered a couple. Covered a few trades far too early. Yeah, this long at 591, I was in on it. That went up to 560. Yeah, it was a 30-point trade I missed out in the overnight session. So instead of making 28.76 today, could have been rolling in at like 4,500. So that was a mistake. But this was a good trade. 620 short, cover at 601.50. The stop was above that high. That was a good trade. Okay, starting out with the regular trading hour session. As you know, I do not trade from 08:15 to 09:45. I think I actually got started a little bit early here. Little bit early. So we'll go to our regular trading hours. I got started at 09:41, so a little bit too early. The first short came in, two contracts at 625 halves and an accidental contract at 614.75. I thought that the market at that point was going to immediately draw back down to our opening range gap, which we did not. So I ended up taking a scratch on that trade. Really, the stop, I should have been stopped out for a loss. Let's see, 637, like there, on two contracts. I'm just being honest, like, or maybe it was okay to take a break even here. I think I tried to short again here, and that was. I see where I got short. Got short on those two green candles, still thinking the market was going to draw back down to opening range gap. And basically, as soon as it did not draw back down to opening range gap, I was out. So that was okay. I'm not too mad about those, honestly. Maybe the break-even stops there were a little bit aggressive, but all things considered, the market was still drawing higher. I think I tried to short again, and I got. Let's see. See, this is the balance, right? I got short at 663.25. And what was that high? That high was 669.75. So 71.75 hit. Yeah, I guess I would have been stopped out. Would have had to re-enter right there. Re-entered again the market as it traded below that green candle, 657.25, and I ended up covering 642 quarters and 646 quarters. That was a good trade there. That's short. Tried to get long on the consequent encroachment of that black candle. Ended up taking a loss. That was pretty questionable. Tried to get long again. Loss. Got long at 620.25. Yeah, so I was taking losses in here. Yeah, so these were all losses. At 620.25, ended up covering for a loss there. Now, really, the stop should have been 2 points below that, and that would have been fine. Then I had a good trade. I will tell you, in that instance, I did have a good trade. So 614.50, that was one tick above that black candle's high. And at this point, I remember thinking to myself, we're probably going all the way back up to this high. We're going to take out the high and make a new high. And so I got long at a stop order at 614.50. You can see the execution there. That was a good execution. That was a very good trade. And then covered one at 650.75, covered one at 661 quarters, and covered one at 672 quarters. So overall, that was no doubt about that. That was a good trade. Very proud of that one. The stop was in the right spot. I thought the market might stop on one of those black candles earlier, but it ended up, anyways. So, first couple of sells, those were ambitious, and those were before I normally would like selling. But when I saw that the market was the black candle trading into that black candle, I knew it was going higher. So that was a good trade. I then sold short 679.75, which I think is the low of that. Is that the low? That green candle, right about. And covered at 672 evens. That was a good trade. Coming down to this buy side amount, sell side efficiency. That was a good trade. Covered one there, covered one there. I think I tried to get short again. Got stopped out. Tried to get long at 666 evens. I ended up taking a loss on that. So I tried to get long. I remember this. Tried to get long on that black candle. That didn't work out. So I ended up taking a loss on that. But then as the market, see here's the thing, guys. As the market came back up above this candle, I got long again. And I put my stop. So this, I remember this. You see this low here at 655 halves? I put my stop at 653 halves. 2 points below the low that was just made. and I was not stopped out. So I was long 3 contracts here, and then cover, cover, cover. So that was good trading there. Yeah, and then I tried to get short on this wick inversion here. The market was still drawing higher, so I ended up taking a loss on that. I'm not too upset about that. Like overall, I think the market at that time did look like it wanted to come back lower, but the drawn liquidity was up to 720. So the market was still drawing higher at that time. So that was a loss. And then I got short as the market came below this green candle and made this was an order block. Got short 3 contracts at 701.50, covered at 692, 691 halves, and 699 quarters as the market came back above this swing. At that time, I thought the market was going to start drawing lower. It did not. But overall, good entry here, obviously. Wasn't ideal. You know, the best idea was right there. But what is that, guys, right there? That was a breakaway gap. See that? Breakaway gap. So I'm pretty pleased with that short there at 701.50, and then I covered at the right spots. The third contract was a little bit late. My final trade of the day, I got short here at 726 quarters, which I believe that was a stop order right there. The first cover was early. I just kind of wanted to take some risk off, so I took 6 points on the first one, and then I took another 8 points on the second contract. Third contract I let run down to 694 halves. That first contract I did probably leave. You know, but here's the thing, right? When the market was doing that, I thought, oh, well, maybe it's going to come back up and tag me out. So I wanted to just grab my profit. So that was not an optimal exit. That was really not an optimal exit either. But I saw this buy-side imbalance, sell-side inefficiency, and I really didn't want to stand in the way of that. So I just decided to get the risk down to 1 contract. And, of course, third contract I let go all the way. So today's trading was good. I'm obviously going to end in a profit with a lot of mistakes and a lot of losing trades. So my mistakes today were not entering on a proper PD array. Like some of these trades, especially in the Asian session on Monday, I was not entering it on a proper PD array. A couple of these had too tight of stops. And then I covered a few trades, you know, did not let the profit run too far. So, okay, this has been a review of my trades for Tuesday, July 25th, 2023. Thank you.